Hello, everyone. Thanks for joining today. Today, Kelly is got stuck working on some loans today. So you got me, and the topic is down payments today. So here we go. Let's share my screen, get the down payments here. Dun, 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 dun. Go. Okay. So today is down payments and helping buyers understand about down payments. So, of course, always loans programs and assistance program, down payment assistance programs and community renewal programs. And there's always different kinds of programs. So always reach out to your favorite loan officer to get any updates of anything new with down payment assistance and down payments and rates and all of that. But this is some basics of things to educate you to tell your clients. So first, a down payment is what buyer pays up front. It is expressed as a percentage of purchase price. The down payment reduces the amount borrowed. Larger down payments typically result in lower loan balances. Different loan programs have different down payment requirements. Many buyers still believe that they need 20% down so educate them that there's 3.5% down, there's 5% down. Also, check with your loan officer, do the math. And some people feel that they have to put a certain down payment down, or they think their loan amount is going to go down so much more because of the down payment. Also, sometimes they think, because this used to be the case all of the time, some people thought 20% down was always a lower rate than 5% down or FHA or a conventional loan. That's not always the case. Sometimes there's, because of the way the rates are in the programs between conventional and FHA, 20% down sometimes doesn't get you a better rate. And I always use the term $1,000 of loan is about $7 to $8 a month. That's what I round it is. So if someone says, I want to put an extra 10% down or $10,000 down, I go, really, that's only saving you about $70 to $80 a month. They're like, wow, I'd rather have that 10,000 to do other things. So just again, some tips. Common down payment requirements. Conventional loans may require little as 3% down. FHA loans typically have 3.5% down. VA loans may offer 0% down for eligible veterans. USDA loans may offer 0% down too. In qualifying areas, USDA is qualifying cities, counties, areas, types of homes. Investment properties often require larger down payments. They do. Not to go off on a tangent like I always do, but that was a real problem with the crash in 2008 was investment properties. People were able to buy investment properties with so little to no money down in stated income programs, and that was a big problem. So investment properties definitely in a limit too. Pro tip, never assume a buyer doesn't qualify because they lack a large down payment. Connect with the lender first. There are really people that have a few $1,000s in the bank getting loans, getting mortgages. So check. So people sometimes think I need a lot of money to buy a house. That's not the case. Good income, good credit, and just enough for a down payment and some reserves, you're good to go. Benefit of large down payment reduces the loan amount, lowers monthly mortgage payments, may result in better loan terms, builds instant equity in the property, can improve overall loan approval strength. Show buyers how different down payment amounts affect their monthly payments. That's exactly kind of what I said, right? All righty. So now, down payments and pre-approvals, I think it is a big thing. I think it's very important to put that down payment in the contract. Some agents don't think so. Some agents say, why does it matter? It matters when comparing to other amounts. Also, as long as it doesn't affect the approval, you can lower that. This is the case. Some people go out, I might want to put 20% down, but I might go 10% down. What should I put on the contract? I go 20. You put 20%. The only problem you would have as a buyer is that if you drop down before closing, drop down to 10% and you don't get your loan approved because of it, then that's an issue. If you go from 20% down to 10% down, the loan closes like normal, there's no changes in the contract, seller doesn't care. It doesn't affect them, it doesn't affect that. So you're not legally obligated to put 20% down if it's in the contract, only if that affects the transaction from closing, if that makes sense. Benefit of smaller down payment allows buyers to purchase sooner, preserves cash reserves for emergencies, leaves funds available for moving expenses, may allow buyers to maintain investment accounts, can be a good option in appreciating markets. Pro tip, sometimes waiting years to save 20% costs more than buying sooner with a smaller down payment. Definitely, definitely. Tell anybody it's like, well, I'm going to save up more money for a bigger down payment. Like, it's better to buy now, and you could always refinance. So, example, someone buys a house, just use round numbers, $100,000 house. They want to put 5% down, $5,000 now. And then someday they go, well, I want to save up to 20% because I want to get my payment down. Now, all of a sudden, a year into the mortgage, 2 years into the mortgage, they come up with an extra $20,000. They go, oh, I want to put that towards principal. You could put it towards principal, and now your payment stays the same. Your payment doesn't change, but more money goes towards principal. So you're paying off your loans faster. So these are things that you could tell your buyers, like, hey, if all of a sudden you're like, hey, a year from now, 2 years from now, I'm going to get an extra $20,000 for a bonus or a gift or whatever, and they want to buy a house now, you buy a house now, then when you get the 20, you could put it towards your principal, and your payment will stay the same, but more money, it's a benefit, more money, or you can always refinance it and put it in. So like example, someone says, say just easy numbers, they put 5% down, loan amounts 95,000 on $100,000 loan. All of a sudden, let's say again round numbers, it's still at 95,000. They come across $15,000. They want to put it towards their house, but they want to lower their payment. You could refinance and bring money in, kind of. So a lot of times people think refinancing means you can't change your loan amount or it goes up all the time. No, if you want to put money towards your principal, refinance the loan. There's also, not to keep going on, there's also called recasting. Sometimes, example, always ask your loan officer about recasting. Someone says, well, I want to buy this house, but I want to sell my house to get all the equity to put here. So they can, you could do two things, get the equity out, put it in, or they could buy the new house and they might have an option of what's called recasting the first 12 months. So all of a sudden they buy the new house, put minimum down, say 5% down, then they end up selling their house, get 50,000 in equity out, and want to put it towards this house. They sometimes the lender or the servicer will allow you to recast it, which means you don't have to refinance it. That you put the money in, they'll redo it like you put the money in before. So I always could ask that. Sorry. Source of down payment funds, personal savings account, gift funds from family members, down payment assistance programs, retirement accounts, withdrawals, when permitted, proceeds from the sale of another property. Many buyers are unaware that gift funds and assistance programs may be available to help them purchase. I'm going to go right into the number one hiccup buyers have and agents have when they don't talk to a lender. Buyer goes to agent, said, I have $100,000 in a retirement account. I'm going to buy a house with it. Great. Let's start looking for houses, and they don't worry about getting them pre-approved, or they just get them pre-approved with some, who knows, mortgage company or bank online, and they don't do their due diligence, the loan officer. What I mean by that, some people actually think that they have $100,000 in a retirement account. They're just going to cash it in and buy a house, or easily take out $20,000. So what I always say to this, if you're having an initial conversation with somebody, and they go, oh yeah, I have money in an investment account or retirement. If it's in an investment account or retirement account, it doesn't matter. But say this: Have you talked to your financial advisor about taking that money out? Have you talked to them? Yeah, yeah, talk to them because they might say you can't take it out, or you're going to get taxed on it, or you shouldn't do that, or this or that. And all of a sudden, you're into a sale and or about to write an offer, and then they want to back out because now they thought they had the funds and were advised not to use it. Also, you could say move the money now. If you, oh, I got to buy a house, great. Take that money out. The lender's going to want to see it in a savings or checking account, liquid funds before closing, and you need to move that as soon as possible, just so it doesn't show any negative effect on your investment account. Down payment myths. Every loan requires 20% down. First time buyers cannot qualify. Down payment is the only cash needed. Buyers with student loans cannot buy a home. Renting is always cheaper than owning. The more myths you eliminate, the more confidence buyers become in taking the next steps with you. So yes, we know no 20% down, don't need that. First-time home buyers, a lot of first-time home buyer programs and things that help them get into homes. Down payment is the only cash you need. Some people go, I have $20,000 in the bank. I want to use that for the down payment. No, there's closing costs, prepaids, insurance. There's so many more. There's settlement charges. There's closing costs and settlement charges. Whole nother class. So sometimes buyers think, but if they get it with a good loan officer, go, hey, I have 20%. I want to put $20,000 down. Great. At closing, you're going to need $28,000. Like, wait. I want 20,000. That's my down payment. That's all I need. No, there's closing costs, prepaids, settlement charges, and a good loan officer is going to go through those step forward, ups and downs, and make sure they're aware of what's they will need to close, the money needed to close on them. And we all know, well, in student loans, some student loans are not counted towards their debt to income ratios. So again, they have to pull their credit, see what type of loans they are, see what payments they are, if they're deferred payments, if they're in school, when will they have to start paying them back? Are they fixed amounts? Again, like any other debt, but some people that are riddled with student loans can still buy a house. Helping buyers plan for success, encourage buyers to get pre-approved early. Most important, discuss savings goals and timelines, connect clients with trusted lenders, explore assistance programs when available, set realistic expectations about costs. Pro tip, the realtor who helps a buyer create a financial plan often earns a client for life. So yes, just again, get them. If someone says, hey, I'm going to buy a house when I get some money, but I have zero savings right now to buy a house, get them pre-approved. They don't need the pre-approval. Most of it is based on their income. Can they afford this payment? So many times I know from Kelly saying this, she pre-approves buyers all the time going, hey, you're pre-approved. You could buy a house, but you're going to need X amount of down payment and that start saving. And now you have a goal. So don't tell if someone says, yeah, I'm going to buy a house someday. I'm trying to save some money. Great. Get pre-approved. So you at least know what your payment would be and around and all of that. And then a year from now. So you don't have to wait to start looking for houses today to get pre-approved. Hopefully, yeah. So pre-approval doesn't like you're not wasting a loan officer's time. They would love a client that they could start with way early and then they buy a year from now. Great. Closing thoughts. Understanding down payment options empowers buyers to make better decisions and often helps them realize that homeownership is closer than they think. Yes, so many people think that they have to have perfect credit or they don't understand how much more they could save in buying homes. And I'm going to stand on my soapbox here. Let me get off the share. Okay. So I'm gonna get on my soapbox here. My public service announcement to all agents, especially in lower income neighborhoods. We need to get a lot of people off paying these astronomical rents in single family houses because they are in a life of renting. They just used to it. Their family's been used to it. They just rent, rent, rent. There's certain parts of Cleveland that the whole city is like 70% rentals. How we let that get this way? We let this because we didn't educate people. They think they have to rent. My credit's not good enough. I can't save enough money. And they didn't realize that someone bought their house that they've been renting forever and they're making their rent payment is more than what their mortgage payment would be. It's so sad when I see this happen. I know it happened because we have agents that have investors that are buying up properties in these neighborhoods. So because they could charge so crazy rents to people so I will just say it, I love investors, but I don't love that if I go invest, fix up houses, go that. But when I see people, especially out of country, out of the state, buying up hundreds, thousands of houses in just certain neighborhoods and parts of the city because they know that the education of certain people is that they think they have to rent all the time because this is how they've always lived. They've always rented. They didn't know about home ownership because no one's educating them. And everybody they live near is renting too. So no one's talking about that. So please, that's my public service announcement. Anybody renting a house, talk to them about, would you want to buy a house and maybe have a lower payment? So anybody, anybody that's renting a house that's not short term, like, hey, I'm renting a house or an apartment or a condo for a year or two, then I'm going to buy because my job's moving. But anybody that is living somewhere that's going to be like a lifetime of rent, please talk to them, get pre-approved. Let's see. Let's just see. You never know. Hey, oh, my credit's low. Well, if you just tweak this and do that, we could get your credit up within a year or two. Or, oh, I never have any savings. Well, really, you only need this much savings. Just save this much per month, $50 a month, $100 a month for the next year or two. So, and then you could buy your house and save yourself some money. So please, we educate anybody that's renting for life or many, many years, a house. I understand an apartment. I understand, that. But if you're renting a single family house for a long period of time, you should be looking at buying sometime. So that's it for today. I got on my soapbox there. Thank you for listening. But remember, reach out to me or Kelly if you have any questions. Of course, Kelly's the best resource for that. She knows everything inside and out, and be happy to help you. So that's it. Have a wonderful day, everyone. Hope to talk to you soon. Bye bye.